We are joined by Mr. Seetharaman, the CFO at Tech Wabag, to talk to us about the commentary for Tech Wabag going forward. That stock was under pressure but has recovered mildly from the day's low, given the fact that the commentary in the presentation is quite impressive. Let me actually start with that, Mr. Seetharaman. Talk to me about the order inflow pipeline that you see for yourself, because I understand you're looking at increasing your O&M portfolio as well as the export and the international presence. Talk to me about the way forward on the order inflow side for FY25.
Hi, good afternoon. Thank you very much for having us on your show. Yes, it's been another successful year that we have delivered, and that's the basis and confidence, not just 1 year. I think over the last 3 years since we have moved to our new strategy, our performance as well as results and assets, liabilities, everything has been good. And this has given us the confidence to give a better outlook to the market for the next medium term, 3 to 5 years. And we look at more than 50% of our business coming from international, but 30% of our overall business being industrial, taking our O&M to 20%, and our EP to be about 1/3 of our EPC. And we will remain asset light and keep focusing on the emerging economies. And when I say emerging economies, the order intake is also going to be from these places: India, Middle East, Africa, and Southeast Asia. These are our focus areas. And here we see very strong order outlook, whether it is from desalination, wastewater treatment, recycled reuse. This will be our major, and industrial water treatment. So these are the 3-4 areas in advanced technology projects where we see that our order intake will come through in the next year and in a strong way.
Okay, so the order inflow visibility is clearly strong, but what about your execution capabilities? Because I understand you're guiding for a 15 to 20% growth on a compounded basis for the next 3 to 5 years. Talk to me about what's going to drive this, in the sense, because earlier you have been facing some execution issues in a few of these projects. What's the way forward expected to be like in terms of execution?
See, we've always seen revenues as a consequence, not as a driver. Our driver has been profitable growth. So we want to give profitable returns to the investors. The revenue is a consequence, and more so because of the strategy. We moved more towards EP projects, more toward industrial and international projects. And this resulted in the construction portion coming down, which means obviously the turnover numbers would be a little muted. But if you have seen, our EBITDAs have gone from 7-8% range to a 13-14% range. And this is what I think should, and we have also become net cash over the last 4 years. We are at about 240 crores close net cash. We have generated about 170 crores of free cash. So from our point of view, really, we don't see any execution challenges. In fact, there is a lot more capacity that we have to go up, and this is how we are guiding growth. And all these regions are throwing up projects which are right in the play for us.
Clearly, order visibility is strong, but you talked about margin improvement, how from single digit you've already reached 13%, and now you're guiding, if I have it right, 13 to 15% in FY25. What are you doing to achieve that? Is it the fact that you are pricing your contracts a lot more lucrative, or you're doing some cost efficiencies, management plan? What's really happening that's driving the margins for you?
See, we are a leading player in the water market. So our responsibility is also to bring down the overall cost of water. So there is only so much we can do on the price. What we do more is the value engineering that we bring to the project, the cost control activities that we do internally, the better debt and cash management that we do. And obviously, with the mix of going more international, going more industrial, we are able to command value over price. And this has been a key driver till now and will continue to drive the margins. Plus, of course, we are also reducing our construction portion in the overall mix of revenues, which is another ticker. Getting more O&M is another ticker for the margins going up. And obviously, we have been slimming down as a business from the geographies which are more top line focused rather than bottom line focused. And that is where we divested from our Swiss and Czech subsidiaries. All these triggers and our continuous control, value engineering, and going international will help us take the margins up.
Okay, so that's good to know. But working capital challenges were also something that were plaguing the company's balance sheet a bit, with receivables being high or being a bit sticky. Have the situation improved? What's the net working capital day cycle right now? What is it expected to improve to?
See, I think first of all, doing it annually is something we don't do. You have to see projects run for 2-3 years. So the cycles will be different. In a year, I could be as low as 50 days. In some periods, I could be more than 100 days. So this is the nature of the business. In different stages of projects, you'll have different working capital cycles. But what's important is, do I throw up cash from the projects? And this we have seen in the last 4 years. We have had both free cash flow and net cash. And this is what we focus on. These cycles of projects will keep moving. And you have seen we have used lower and lower of debt. We have continuously reduced our interest costs. Our order books, despite our order book going up, our interest cost has been lower despite the inflationary environment. So all of these also kind of signify that we are controlling our working capital well, and all the key triggers are coming through. And even in our outlook, we have said we will remain asset light. We will continue to generate free cash as well as through net cash. And this will be our focus area.
Okay, Mr. Seetharaman, on that optimistic note, we'll let you go, hoping to see that improvement in your working capital and the rest of the parameters in the coming quarters as well.